As the polls ahead of the US election today once again is starting to show a more favor towards Clinton, we've seen gold sell off once again. The market was testing this key level of resistance at 1308 last week as the polls started to narrow. So clearly the market is indicating that a Trump win will send gold higher, and a Clinton win would leave the market to start focusing on what was the issues before this latest run up to the election. So what can we expect? Well, at this stage where the market is retracing, we're looking at some key support here between 1275 and 1283. If we break that, we really need to hold 1267 to the downside. I think we probably will at this stage because the market is pricing out, has been pricing out a Trump win. On the assumption that we do see Clinton win the presidential election, the market will quickly start to revert, focusing on some of the other drivers that we've seen in the run-up to the election. One of those is the risk of a December rate hike. Given the Clinton win, you can almost assume that a rate hike is a given, and I think it's also more or less priced into the gold market at this stage. Otherwise, we also have we've seen inflation start to pick up in recent months, and that's led to rising bond yields. But we're also seeing break-evens rising, so the forward inflation expectations are rising at the same time. This is leaving real yields just above zero in the 10-year area, and as long as real yields remain close to zero, then we'll not see a negative impact from rising bond yields. So at this stage, we still believe that gold will find some traction over the coming months. Just in the short term, 1267 really needs to hold. If it doesn't, then we could see another test of the key area of support below it between 1240 and 1250. But we assume Clinton will win. We assume there will be a little bit more profit taking coming into the market, but then the market will start to revert, looking at some of the other drivers in the market, and we see those as being positive.